What's up, folks? It's Eric with Option Edge, and in today's video, I want to show you what I think are the best stocks to run a Iron Condor strategy in. I'm going to start with a portfolio of stocks. Let's do the Magnificent Seven here, and we're going to sell an Iron Condor. We're going to be short it. We're never going to trade earnings, and we're going to have no technical open. Okay, so this is going to run normal time. We're going to do this for the past year. Okay. And we're going to put gains at 50%, no stop loss, and we're going to let's do our days till expiry. It's going to be 45 days. These are these are tasty trade mechanics. You can look that up. Basically, their mechanics state you want to sell Iron Condors. You want to sell an Iron Condor with 45 days to expiry. Really, 45 days is the sweet spot. Exit at 50% gain, and then close out about halfway through the expiration cycle to limit gamma exposure. So we're going to let this thing run. All right, so losing strategy over the last year, every trade averaged about negative 0.4% return with a total return of $4,000. Okay, so now we're going to do the top 6 banks by market cap. Let's see how that works out. Bank of America, decent results. Citi, not so much. JPM, not so much. Wells Fargo, not so much. Goldman, down real bad. Capital One, down real bad. Okay. Actually, a positive average trade return percentage, but overall, terrible return. And I should say that the deltas we're using for this are 20 and 5. So pretty wide wings on this Condor, and we're just inside the 1 standard deviation move. Usually the 16 delta is about 1 standard deviation. I came in a little bit, so we get a little bit more of a credit. Okay, and let's go on. So already we're negative on both of these. Let's do some utilities. We're doing these 6 names, which are some of the big utility companies. All right, so pretty good returns from the utility companies with a average percentage return of 5.67 with an 11K total return. Okay, so that's the best one yet. So utilities are doing well. So let's see if we can find something that has a even better return and average trade percentage return. So we're gonna do some mega caps with some other names in there. So we got some of the Mag 7s in there. We got J&J, we got the banks, Costco, Adobe, so some software names, some Dow names, John Deere. All right, here are the results here for these names. So, we got a hodgepodge of Mag 7 stocks, some Dow Jones stocks, and some software stocks. And you can see that this also had a pretty poor return with negative 6,500 return. We are almost 0.1% or almost a 1% average trade return, however, but overall, I'm looking for something that has a good average trade percentage and then also a good total return. So let's go. We did utilities was a winning portfolio. Now let's do some of the most liquid ETFs. Okay, let's show you what that comprises of. You got your SPY, your QQQs, your IWMs. Wow, okay, so you can see that our liquid ETFs without any opening criteria for these trades yielded 8.69% percentage per trade return per trade, and then we got 21K of total returns. So that's pretty good. So this is only the last year. Let's test over the last 2 years, 3 years, and 5 years and see how that works. Okay, again, total return. In 2 years, we added another about 10K to that return. Average trade percentage is down a little bit. So let's go out to the 3-year mark. All right, the 3-year mark, we added like another 10K cumulative to our total return in that extra year compared to the 2-year back test. And our average trade percentage has come down a little bit. Now, last but not least, let's see the 5-year returns. All right, so then the 5-year return, you can see our total return was 75K with an average return per trade of 7.1%. So pretty good. So you can see that, wow, every single one of these resulted in a positive total return besides gold. And you can see out of the average percent trade, and out of the average trade percentage, you can see that only the QQQs and gold had a negative percent there. So pretty impressive. So there you have it. I think so. There you have it. The ETFs tend to be the best names to trade iron condors, and I think it's just because if you saw before, basically the tech names tend to have more volatility, and I think the vol in tech names tends to be understated compared to what you get for the premium when you're selling these options. So there you have it. That's the results. Hope you enjoyed this one. Like and comment and share with your friends. Peace.